Hey guys, it's Jenny Silver, and today I want to talk to you about the importance of running your YouTube channel as a business. Now, some people start off on YouTube and they may begin as a hobby. It might be something that you never intended to be a stream of income or even a business. However, once you get your channel monetized, all that can change very quickly. As your YouTube channel starts to earn you income, or as you start a YouTube channel with the goal of earning income, it is extremely important that you set it up from the beginning as a business. There's a few reasons why. Number one, you want to make sure you are tracking your expenses. In the early stages, you may be investing in things such as camera gear, lights, subscriptions, services, stock photos, music, etc. There's just a plethora of things that you might be investing in to get your channel up and running. All of these things are business expenses, which means that they can be deducted on your income tax return for huge tax savings. But in order to take these deductions, you want to make sure that you are keeping very careful records of your finances when it comes to your YouTube channel, so that later on down the line at tax time, you are all set. So how can you do this? Well, the first step is going to be setting up your business checking and a business savings account. You want to completely separate your finances from your personal finances. The checking account is going to be where you have Google AdSense or other income streams deposit directly into that account. So you have one account for those earnings. That way, you have a clear way to track your income as it comes into the business checking account. This is going to be the account that you use for purchases for your channel as well. Now, that business checking account can be used to transfer money from checking over to savings for tax time. Your YouTube ad revenue and other earnings is going to be self-employed income, and you're going to need to pay taxes on it at the end of the year with your end of year tax returns. Therefore, you will need to set aside a percentage of your income. Now, you will use your business checking account not only to receive your ad revenue or other income, but also to purchase anything that goes into operation of your channel. All of these are going to be business expenses. So any of these business expenses, if you buy a new camera, if you buy a new lens, if you purchase lighting equipment, if you buy software, if you enroll in a service, these are all going to be paid for with your business checking account. Keep it 100% separated from your personal accounts. So how do you pay yourself as a YouTuber? If you have YouTube ad revenue coming into that business checking account, how do you then receive a payout? Well, you're going to do what is called an owner's draw. As a sole proprietor, you can pay yourself simply by transferring that money from business checking over to a personal account. This is known as doing an owner's draw. You can pay yourself however frequently you choose to do so as a sole proprietor. You then have a very clear way of tracking exactly how much money you are taking out and making from your business. You also then do not interfere with confusing business expenses and personal expenses. Everything is separate from the beginning. Now, what if you didn't do this from the beginning? Well, that's okay, because you're going to start as soon as you possibly can. You want as little confusion as possible when it comes to tax time, accounting, record keeping. You want to try the best you can to keep things completely separate. Next, you should set up your YouTube channel as a legal business. When you create content on YouTube and your channel gets monetized, Google AdSense will be paying you out for the advertisements that are shown on your channel. Google AdSense will send you money directly to whatever account you specify. You are then required to claim that ad revenue income on your end of year taxes and pay income taxes on it. As an individual, you are automatically classified as a sole proprietor. You don't technically have to file any additional paperwork to be classified as a sole proprietor. Now, according to the IRS, as a sole proprietor, you and your business are one and the same. You're going to be utilizing your first and last name, your social security number, to have all of that tax tied to yourself as a sole proprietor. Registration requirements for small businesses are going to be different according to your state, your city, and your county. So you're going to need to check on your specific requirements within your local jurisdiction. I would strongly recommend that you consider registering yourself as a business, even if you don't feel that your county says that it's a requirement or that you feel like you're fully ready, because you want to set yourself up for success with a mindset for growth. If you are not set up and ready to grow from the beginning, it's going to be much more challenging and difficult as you progress further on down the line, as your income grows, and as things get more complicated. You might make mistakes, you might skip steps, and you might need to backtrack and change some of these things later on down the line, which can be a really big mess. So, what do you do first? Each city and county has their own unique requirements, but in general, number one, you're going to want to register your DBA. Your doing business as name is oftentimes referred to as a fictitious business name, depending on what city you're in. Now, if you're sole proprietor and you're operating under your first and last name only, you don't have any additional changes, nothing is missing, it is just simply your first and last legal name, then you don't need to register a doing business as or fictitious business name statement. But if you are planning to operate under a different name, then you're going to need to register that name with your county clerk recorder's office. Once you register with your county clerk recorder's office, you will then, in some cities, need to publish that fictitious business name in a local newspaper. Your county clerk recorder's office is going to let you know exactly what is required of you and will be able to provide you with a specific list of publications that are acceptable. Now, once you have filed your DBA, the next step would be to obtain an EIN, which is an employer identification number, if you choose to do so. Now, this is not going to be a requirement for a sole proprietor. However, if you do not want to release your own personal social security number in any business transactions, then this is going to be essential. Additionally, if you are applying for a business bank account, then many institutions will require an EIN. An EIN is really easy to obtain, and I would suggest obtaining one just in case you should happen to need it or prefer to use it. Now, this is a super simple, easy process that you can do on the IRS website for free. So why must you obtain an EIN and a DBA before you actually get a business license? Well, on the business license form, you're going to be asked for your DBA and your EIN. Therefore, it's best to do those two steps in the process first. You will also be asked for a seller's permit number. So if you plan on selling any tangible products and you are not using a marketplace that collects that sales tax for you, then the next step in the process would be applying for your seller's permit. But this is only if you're selling tangible products. The next step is going to be to apply for your business license. Now, each city is going to have its own specific method, requirements, and forms in order to apply for a business license. So you will need to seek this out through your city. And the last thing that I'm going to recommend for a YouTube channel would be that you get equipment insurance on all of your business personal property. Now, this would include your camera that you use to film, your lenses, your lights, your computer system, essentially any tangible property that you are going to be using to operate your channel, create your content, and run your business. All of this should be insured. The additional expense might seem like something you want to avoid, but it is completely worth it. Now, for me personally, I have about $40,000 of equipment insured, and my premium for the equipment insurance every year is about $500. With someone with less equipment, it's going to be a lot less than that. Now, I have a $0 deductible, which means that anytime something breaks, I simply send it off, get it repaired, and then I can get reimbursed at a $0 deductible from my insurance company. Now, this may increase my premium a tiny bit the next year, but it is well worth it, because if you are creating YouTube content regularly, if this ends up being a main stream of income and you rely on it, if you've invested in costly equipment, if you drop a lens, if something breaks unexpectedly, then you can get it repaired or replace it without having it impact your channel development and your business overall. Now, this might be something that you think you don't need until you need it or something goes wrong. And if you have it, it is going to be a huge money saver in the long run. The last thing I want to talk to you about, which I already touched on briefly, but I want to talk about it again more in depth, is setting yourself up for success at tax time. YouTube content creators oftentimes do not realize how hard they will be hit at tax time. If your channel is generating ad revenue, sponsorships, affiliate income, you will be required to claim that income as self-employed income on your tax return. You then will be required to pay income taxes on it. Now, technically, the IRS views any income $400 or above not as a hobby, but as self-employed income. Now, you're going to be required to pay two different types of taxes on this. You're going to be required to pay federal and state income taxes like usual, but you're also going to be required to pay what is called self-employed income tax. Self-employed income tax amounts to 15.3%, and it's there to cover Social Security and Medicare. This is the equivalent of payroll taxes for those who are employed by an employer. So this adds up very quickly. If you are not setting aside money for tax time, you're going to be hit very hard. So make sure that you take your payments from Google AdSense into a separate checking account. Then the first thing that you're going to do when that money hits your account is you are going to then transfer the amount that you anticipate you will owe on taxes over to your business savings account. That way, you do not touch it. It is out of sight, out of mind, and it sits there until tax time. The goal here is to overestimate the amount that you will need. So how much should you transfer? Well, this is going to depend differently on everyone based on their own unique income, their tax bracket, their deductions, etc. Keep in mind, I am not a CPA. I'm not an attorney. I'm not a tax professional. I'm not your accountant. You need to check with your own specific dedicated tax professional to get advice. So I cannot give you advice, but I can tell you what I do. I personally always set aside 30%. Now, as a self-employed individual, you will pay the taxes that you owe from the year of prior income. Just estimated quarterly taxes is a requirement if you estimate that next year you will owe $1,000 or more in income taxes. This is a requirement if you estimate that next year you're going to owe $1,000 or more in income taxes. Now, if you and the IRS thinks that you are going to owe $1,000 or more in income taxes next year, then the IRS is going to ask you what you think you will earn and then chunk out those estimated balances into 4 quarterly payments. So if you pay your taxes in April when they are due, you are going to pay taxes on last year's income, but you also need to know that you're going to have due your first quarter estimated taxes as well. So anticipate not just last year's taxes, but this first round of estimated quarterly taxes to be due. So if you are starting a YouTube channel and it's a hobby, do you need to be concerned with all of this? Not quite yet. However, if you are starting a YouTube channel with the hopes that it becomes a stream of income or a new branch of your business or your only means of income, then you absolutely want to start with this from the beginning. In addition to setting yourself up for legal purposes, financial purposes, and protecting yourself, setting yourself up as a business from the get-go also changes your mindset and your habits with how you are approaching growing your channel. It's also going to change you from thinking of it as a hobby, as something that you do every now and again with no obligation, to something that you are fully invested in. A hobby is something you do in your free time. You do it whenever you feel like doing it. When you don't, you don't. But if you approach things from a business standpoint, if you put in the time for these steps, if you're invested in making it grow, it's going to completely change your mindset. So setting up these things will not only help to protect you and set you up in a way that is ready for growth, it is mentally going to make a switch in your mind in how you create content, the frequency at which you create that content, the quality, and your overall investment in your channel. Lastly, I want to invite you to get instant access to a free training on the 3 keys that will cause YouTube to blow up your channel. Click the link down below. It includes vital information that you need to know before you create your next video.